Welcome guys. So today's section we are going to be I'm going to be explaining POI. Okay, POI also known as point of interest. But for the purpose of this class, I'm going to be working with the advanced market structure. I'm going to be explaining POI respectively with the advanced market structure. I believe if you watch my previous video, you will see where I talked about the market structure, the five rules of the advanced market structure. Then I talk about the liquidity also. So if you are watching this video, just know that you need to watch the basic market structure video I drop and also the liquidity because I'll be explaining it step by step. The first topic was market structure. I've dropped a video. The second was liquidity, and the third now is POI, which is point of interest. After this, I am going to be explaining supply and demand, so you'll be able to understand the basic market, advanced market structure, and then you'll be able to apply this trading model and win a lot of trade. But I believe by now you should understand what POI is. Okay, take for example, we have the basic market structure, right? Where we have a point moving like this. Okay, right. Now we have something like our entity to be somewhere at this point. Okay, somewhere at this point like this, right? What we're going to do, we are going to be put our long tooth somewhere here, right? A long tooth somewhere here, and then with expect price to come to this point of interest, all right, and then go to the opposite direction, right? So this is what POI means with the basic market structure. And the same thing for a sell. Say you want to take a sell, right? The same thing that is going to happen like this, right? So this is for a sell, this is for a sell, okay, and then this is for a buy, okay. Because one thing with POI, let's say you are trading liquidity, okay, the distance from your liquidity to a protected low is going to be so wide. That is why you will need a point of interest that okay, this is the point I'm going to execute this trade. This is the point I am not going to execute this trade. So there are confirmation you need to see before you take a trade. That is why point of interest is very important because if you mark up your if you mark your setup down, okay, for some time price is going to start moving to any direction they want until it come back to that important zone, which is your point of interest, give you the confirmation before you execute that trade. So today I'm going to be explaining this point of interest with the advanced market structure. So if you watch my basic market structure video, the market structure video I drop and the liquidity, this shouldn't be difficult for you. Okay, so if you're having any confusion, I just need to go back to the previous video that I've dropped already, and then this is going to get more clearer for you. Okay, so now using the advanced market structure, we have our sweep of liquidity, okay, and then we have our protected high, all right. Then we have our the this is presented high, then we have this structure has been broken, right? Then we have this 50% retracement which give us our structural liquidity, and then price move to the opposite direction, and then okay, you see price begin to range, move. Now for this purpose, okay, now this point here is our protected high. This is our transactional liquidity. This transactional liquidity is used for correction. Okay, and structural liquidity is used for continuation. And the reason why this is used for continuation is because this price is going to get back to this zone, take out this structural liquidity, and then sell off. Okay, so but now our POI in this zone is away from this protected high to this structural liquidity. So let's mark it down. Let's mark it down. All right. You need to pay close attention to this. Okay. Now, this is this is the whole of this place. The whole of this place now becomes our POI. All right. The whole of this place becomes our POI, our point of interest, because this is the point we want price. Okay, this is the point we want price to get to before it starts selling the opposite direction. Okay, so price will get to that point, this zone, and start selling to the opposite direction. But one thing is very important: this zone is very wide. Okay, if you take trade from this zone, okay, it might be easily get stopped because of the amount of capital you're using. Maybe you take your entry here and price might go and sell from here. Maybe before price reach this point, you're already at. So this is when you need a confirmation entry. Okay, that's why they say inside that POI, there is another POI in it. You don't just trade POI because you might be having $10, then you're trading a very volatile pair. You take a trade from your POI here, then price weak out your protected high, and then take you out already. You hit stop loss and then you start selling. You'll be like you did the right thing, but then price didn't tag you along. That is because inside the POI, you need another POI where you get your confirmation that okay, this price is going to sell, this price is going to buy at a particular point. Okay, so let's say you trade supply and demand, you trade order block, you trade breaker block, and all of that. Now, you need to have, let's say you come to this point. Okay, let's say you are trading supply and demand or order block. Okay, when you come here, you need to see, you come to this zone, you need to look out for your order block. Okay, let's say your order block is somewhere here. Let's say you have your order block here, right? The order block is here. What you need to do is to mark that order block. Inside that POI, there is another POI in it. So you mark the order block. So if price tap in your POI, alright, you're not going to take that sell until you tap your order block or your supply level, and then gives you confirmation. I'm still going to be explaining confirmation entry. And once price gives you the confirmation that you're looking for, alright, there are several confirmation entry for sell, there are several confirmation entry for buy. So whenever you see a confirmation entry for sell in your POI, inside the POI, okay, that is when you take that trade. Because there are times price will come into your POI, your confirmation, tapping your order block or your supply level, and then didn't give confirmation and then buy off. Okay, the reason why for confirmation to save you a lot of stop loss, and that is what you need to understand about stop about POI. POI will help you to take a precise entry in your trade. Okay, I'm going to be also be showing you practical example of what I mean by this POI and how you can apply it to your trading. Okay, now, so what price will do is price will come into this zone, right? My POI, and then sell off, and then sell off. That's just it. So instead of putting my entry from this point, I will put my entry from the point where my order block is or my supply level is, and then put my stop loss somewhere slightly above my protected high, and then mark down my profit level, and that is it. This is exactly what you need to know about POI. POI, right? So for every strategy you're trading, inside that POI, if you know that your stop loss or you blow a lot of money when price comes to your POI, simply because you don't look out for confirmation or you don't know where to mark down. Okay, sometimes you might have two order block in your POI, you might have two supply in your POI or demand in your POI. So you need to mark this down. This is what is going to save you a lot of stop loss, a lot of stress in your trading. So the same thing apply to when you want to buy. Okay, the same thing apply to when you want to buy. This is your structural liquidity. This is your protected low. This is your this is your transactional liquidity. Your first break, your second break. This is an A plus setup. Okay, your first break, your second break, your first break, and then your second break. Okay, this is your sweep of liquidity, transactional liquidity, structural liquidity, first break, second break. Price come back, sweep this liquidity, structural liquidity, which is used for continuation. Tap in your POI, and then tap in the POI inside your POI, and then it buys off. Okay, so this is what you need to understand about POI and the advanced market structure. So if you watch the market structure, I drop the video, and then if you watch the liquidity and then you watch this video, everything is going to be so clear for you. And right now I'm going to dive into the practical example of what I just explained here. Okay, all right. So this is a practical example of that here. So this is V25 volatility 25. I trade synthetic indices. So now we have a I'm looking for a setup that I want to use as an example for you guys here. Let's check another pair. Let's check V100. Let's check V100. Okay, sorry, V100. Okay, so this is V100. Alright, let me invert this key. Okay, this is V100. Okay, this is V100. Now, first of all, what do you see? We have our sweep of liquidity, right? We have our protected high, then we have our structural liquidity, alright? And now this is our POI. You see how wide this POI is? Okay. Some people, some people, they might think that this trade has already hit stop loss, but it has not. Why? Because you are working with confirmation entry, and with this basic advanced market structure, when you want to sell, you look out for your supply level, and when you want to buy, you look out for your demand level. So this is what you are going to be doing inside this POI. The last bullish candle that is yet to be mitigated is what we call our supply level, right? And this is it. Okay, this is it. This red candle I marked here, this red candle I marked here is our supply level, right? So now when price come into your POI and then it tap into your supply level, which means inside that POI there is another POI in it. Okay, inside that POI there is another POI in it, and then what are you going to look for? You are going to look out for your bearish engulfing candle. Okay, and bearish engulfing candle simply means a bullish candle that has been engulfed by the red candle. All right, so that is it. So this is the bullish candle. Right, you can see that this one was not engulfed. This red candle doesn't didn't engulf this green candle, but this red candle engulf this. And we are going to get to confirmation entry still. So this is what happened. You see this confirmation into this supply zone, and then what happened? It sell off. It sell off, and then smashes its target. So this is it. It sell off and smash its target. Okay. So if this is very easy to identify in the market, very easy to identify in the market. The advanced market structure is very easy to identify in the market. So you can easily spot it anywhere. All right, you can easily spot it anywhere and it plays out all the time. But the most important thing is for you to always look out for your confirmation entry. It's very important. Always look out for your confirmation entry in your POI. Alright, that is what is going to save you from a whole lot. Right, you can see there's another one here. There is a sweep here, structural liquidity, structural liquidity. Then we have a protected high here. There's a protected high here, and then this is our sweep of liquidity. This is our sweep of liquidity. This is an A plus setup. This is our first break. This is our second break. Alright. And then this is our POI. Inside the POI, for advanced market structure, when you want to sell, you look out for the last bullish candle that is yet to be unmitigated in your POI. So this is the candle here. This green candle I just marked, this is it. And what did price do? Price came into this zone. It gave a bearish engulfing candle confirmation and it didn't sell. The reason is because it has not yet tapped into the POI, the main POI, which is inside our POI, which is the supply zone, and it moves up again and then give this confirmation, bearish engulfing candle, and then sell off to the target. You can see how easy this is. And then what did it do? It smashes its target. Simple as it is. Okay. And then smashes its target. So this is just what you need to understand about the basic market, advanced market structure. The same thing you see for buy, the same thing you see for sell. Okay, the same thing you see for buy, the same thing you see for sell. So I believe this is clear enough for you. Just have to, all you have to do is look out for the market structure, mark out your supply or demand level, wait for your confirmation, and then you trade. So the next topic I'm going to be dropping here is supply and demand. After the supply and demand, we talk about confirmation entry and all of that, how you can mark out your structure easily. It any market you trade, be it crypto, forex, and currency pair and the rest. This is the same thing you can be doing over and over again. I believe you understand this video, and if you enjoyed this video, make sure you like, share, and subscribe. Okay, and I'll see you on the next one. Have a good day, guys.